Good morning, everyone, and welcome to the European crossover. And we're still seeing the dollar gain. It's still stronger against the euro. And although we have seen the cable pop up into this 2666 to 2660, 2692 area, and we'll go in and take a look at that. Obviously, like I said, the dollar continues to push against the euro, and we know how it is on the Friday flows. And we talked about that before, so the market will just keep on pushing. Expectations of a stimulus and an inflation of the Trump boosts the dollar. Dollar yen on track for 3.3% gain on the week as U.S. yields soar, and we've been talking about it. It's all about the bonds. They're not too far away from a very key level, this 54.24. They are actually right now 55.28. Continue to dip, guys. Lows looks like as low as 55.04. The dollar hovered near a 3.5-month high versus the yen on Friday after making big gains overnight as markets prepared for a Donald Trump presidency that could stimulate the U.S. economy fiscally and lift interest rates. The U.S. currency dipped slightly to 106.61 yen after surging to 106.95 yen overnight, its highest since July 21st. The greenback was set to end the week with a 3.3% gain against its Japanese peer, which was initially expected to emerge on the winning end due to its perceived safe haven status upon a Trump victory in the U.S. presidential elections. The fast pace of the dollar's appreciation against the yen prompted a response from Japan's Finance Minister Taro Aso, usually known to make statements when the currency pair moves in the opposite direction. It is exceptional for the yen to move 5 yen against the dollar in 2 days, he told reporters, stressing the importance of market stability. The dollar slumped briefly towards 101 yen on Wednesday when the Republican candidate, feared by the markets as an unknown entity, edged out Hillary Clinton. But the currency has rallied hard since, along with an ebb and broader risk aversion accompanied by a surge in U.S. yields amid expectations that Trump's policy would boost spending and inflation. The 20 to 30 basis points jump in yields has been the biggest booster for the dollar. It's been euphoria in the market over the past few days, although the dollar yen might have a tough time cracking 107 for now. Following Finance Minister Aso's comments, said Ayako Seta, senior market economist at Sumitomo Mitsui Trust, shared that the dollar has drawn support as expectations that the Federal Reserve may not hike interest rates in December following a Trump win has dissipated. Trump's plans call for massive tax cuts and infrastructure building, which could increase the U.S. budget deficit. U.S. long-dated Treasury yields have duly risen to their highest in more than 10 months. Should the U.S. reflation trade gain traction and longer-dated U.S. Treasuries move higher in an orderly manner, potentially accompanied by Fed policy, this is likely to send the dollar yen higher, wrote currency strategist at ING. Still, they caution against complacency. In contrast, should the theme of the Trump presidency turns into protectionism, the safe haven would likely rally, with dollar yen moving below 100 level. Reflecting such concerns, the Mexican peso was stuck at 20.5 pesos to the dollar in close proximity of a record low seen on Wednesday. Our emerging currencies like the Brazilian real, South African rand, and Indonesian rupiah have also felt the pinch of a Trump's win. His anti-trade rhetoric has spooked emerging markets, rising U.S. yields, and reduced the appeal of their currencies. The euro traded at 0.902 after losing 1% overnight. The common currency was tracked to a 2.3% on the week for that fall. We're currently at 8.79 the euro. I pointed out yesterday on the charts. I still thought we could make a move to that 8.43. I thought that was going to be an area, but like I said, it's hard to want to pick that thing up on a Friday. You know how that goes. As the moves keep going and going, especially in a week like this, they're really going to push people that may have been buying the euro at, let's say, the 940s and the 9 even and the 880s, and we're all below that. Okay, later today we do have Michigan Consumer Confidence. That'll be preliminary. I'm not really sure how much it moves the market because this was even before the election, so I don't think it makes any great impact whatsoever. And that's all we have on tap because we do have a holiday with Veterans Holiday, so for Veterans Day. So hold on. And we'll move into the charts. We had pointed this out yesterday, this 843. This goes way back. I mean, I don't think you can pull up in the chart. You have to go back so far. I mean, you're like all the way back in here. You see this area here? We've got a pretty good solid area of support. Let me get rid of this. This is just, from, we can look at the lower level. I think it's 806. Yeah, 806 to 860. And my thoughts were we could dip. You see where the dotted line is? There's your 843. And you can see there's a lot of volume in this area here. It's also an area that reacted once to before run up. This is going to be, this level right here is 826. But as I said, for the last 4 Fridays, whatever direction the dollar is going, whether it's to the upside or to the downside, it just accentuates that move as we come to the Friday. And I think on a day like today, where people may have been caught on the wrong side, it's probably going to push it even further. So you would have seen that area down there early yesterday. But they're heading, appears that they're heading that way, and there's probably, in all likelihood, no letting up because we just can't get much of a bid. But that you can see here, we've got a pretty good solid area of support. This 806, the lower part of the zone, to 860. Relatively, narrow, 50 pip range where you've seen a lot of volume, which traverses all the way back to December of last year. So this is going back a year. And you can see a lot of volume between 806 to 860. Heavy volume areas, so You actually got the marked off for 802 up to 860. So just a hair above 50 pips, but you can see here that a lot of demand in this zone here. And we're able to go back to, like I said, when we go all the way back to, this whole zone starts from December of last year. You see right here? December, and goes all the way into February. Just right at the beginning of February. So this is from early December to the very early February. So you almost had a 3-month area that where you saw a lot of volume. I guess you could mention in every area, but when you're going lower here, this is a pretty key area here. We're trying to get a little bit of a push in here right now with the euro, just easing up, pushing a little higher. Just so like I said, I thought we'd be able to make it down here, or I thought to get down here to this 843. I thought they might even dip here this morning, they just didn't. So we're going into the cable because the cable all over Euro has been working lower. Cable's another big mover for today. We've come into this little area. Here's that reaction before we broke. Here on this test, which is a 2666, which they made it up here, and 2692 right here. So we really pushed them up higher. When we were down here, I thought they'd probably want to break them a little bit lower and try one more, but we've gone and pushed higher here in the cable and hitting some stops once we got above Friday's high. This is a week ago. So they've really pushed those stops. But we've got this little area right in here, this 2966 to 2666 to 2692. With the exception of the cable, we've just seen straight up dollar strength across the board. And when we move in here into the CAD, it finally made it into this zone that we've been looking at for quite a while. Right there between 35 and the upper part of the zone here. $35.22. It's right in here. You can still push a little bit higher, but there's a good amount of, actually just even a hair above it. This 3550 is pretty good solid volume in here. Pedro was asking, do you think it's one more of the dead cat bounces in cable? Here's the deal on the cable, and we can jump right back in there for you. It's hard to fight these moves on a Friday, and I think that was a good little area. I posted that chart in the chat room when we were right here and we're pulling back a little bit. Because I thought this was a good little area if you, from a day trade point, if you're trying to scalp against it. We've had a little pullback here. If you look at it here on the 15-minute, it doesn't look like much, but we've pulled sub 20. Now we're kind of popping back up. But that's a pretty good little area. But like I said, on Fridays, the only thing that my concern is, like I said, we've had such an extreme move that you'd have to think that, extreme or not, people might be laying some off, especially with the volatility, maybe laying some of these positions off ahead of the weekend. That's what I was pointing towards the euro at 842. If we make more and more run down there and able to tick that 842, I'm not so sure that people won't just turn around and jump out of those positions because it's been such a volatile week and the moves have been so extreme. We'll have to see how that goes and plays out, but I wouldn't necessarily call it a dead cat bounce. I mean, they hit these stops here. We're trading here. I thought there was a chance we'd go in and break one more step lower in here. Watch these people out. We talked about this, and we had a good amount of volume in here. But getting back in here into the dollar CAD, we're really pushed up. Here's my concern here with these dollar pairs right now is they're into some key levels. We talked about the euro, and we're pretty much pressed on the euro, and we have we have this little key zone between 802 to 860, and this 843 is pushing it pretty hard, as is this dollar CAD. I mean, maybe you could squeeze another 30 pips on this dollar CAD, maybe, and potentially the euro could dip potentially maybe to 825, but we're really we're pretty rich at this point. My concern is you've had such violent swings that you might just as well not. What might happen is that you'll see a lot of people just start to even up against these positions. And it's hard to fight that on a Friday, but we're pushed all the way to the edge of the envelope. Maybe we can just press it a little bit further in the case of the dollar CAD. We're right up here. You can see here it stopped right on a dime at the top of the zone. And then pull back, we're making one more foray, but even up, the most it seems like it would squeeze, I showed you that area, would be the 35.59. So if they want to blow some stops, they can. But you have to wonder, after a week like this, if we do blow these stops here, you might see people just jump in and take the other side. And I wouldn't say take the other side, but run out of, exit those positions. It's hard to fight that trend. I mean, the trend we're going, it just seems that we're awfully rich at this point. Looking at the dollar switch, we've had a pretty good run once again here off of these lows, but we're right here at the top of the zone. And I'm saying, like I said, these runs that we've had across the board are pretty phenomenal. And you have to wonder is when you get this far, we've seen this with the dollar yen here, not dollar yen, but the dollar Swiss. This run all the way up here to essentially 99. It came up at a couple of pips shy of 99. These are some pretty good stretch runs after the volatility from way down here when nobody wanted it, and then all of a sudden everybody wanted it, and you rally all the way back up. And I'm just thinking that it's such an extreme move that usually, said you'll go with those moves on a Friday. That makes a lot of sense. That's what they've been doing. It's hard to go and fight that. But because the wild volatility that we've had, I can't help but think people would say, you know what? Who knows what kind of volatility you could have over the weekend? Forget it. I'll go and take the other side. I wouldn't say take the other side, but they would be exiting. Which, if you're a scalper or data trader, you have the opportunity to see a little bit of a pullback here. I mean, all the way across the board, you see this dollar really pressing against everything. We'll go and take a look at the Aussie dollar. We were talking about that yesterday and areas where the market could go to. And we set our next target because we got there. Remember yesterday we were looking at, people look at the scalps. That would be your target, the 76.35. And then if you're holding for a couple of days, your target was going to be 75.50, which we've almost made it right there. Then from a little bit longer term perspective, before you see a good bounce. I think we're talking down here, the 73, 73.60 is what we were talking about. So I remember saying it's still 300 pips from where it was yesterday. But we're not too far. Same thing here, as I mentioned before yesterday, this 75.50. We're not too far from hitting this area here. That's my point is, I think we've pushed some of these markets to the extremes. Look how quickly that the Aussie, we're almost 200 pips off of the highs from, early yesterday. So the moves have been huge. It's not to say they won't stop, but can't help but think that maybe, one more push here into the U.S. session, and you might see some unwinding come back, and maybe come back a little bit in force. So on the Aussie dollar, as I mentioned before, yesterday we were looking at the 76.35 as a scalp type target, and if we were going to go and push lower, looking at the 75.50, and I think this is the area you have to go in and be cautious with. And I guess you have to look at this in totality. Is as we see this Aussie dollar moving lower, and look at the overall markets, and I'm talking about whether it be dollar yen or dollar cat or euro dollar, and how they are positioned when we get down here to this level. I mean, if they're all, and that's my thoughts is. I'm not sure if we can continue to go and push a whole lot higher in the dollar. I mean, like I said, I think we're going in that direction. I think that things are pushing in that direction, especially with the thoughts. Now that Trump's a president, will be president. So I don't think you're going to go in and negate these moves into FX, but I just think that we're a bit of an extreme, and the market may think, you know what, we might see it roll. Who's to say what's going to happen over the weekend? We might just see things roll around, and they may just use an extreme move here to go and exit those positions. You'll probably see a little bit of volatility. When we come back, we're going to also take a closer look here with the dollar yen, and then we'll take a look at the gold market and also the S&Ps. We may take a look also where we're positioned in the bond market, because certainly that's having a big impact with the dollar yen. Okay, everybody, welcome back to the crossover. And I mentioned that we were going to go and take a look at the bond market just to get a fix on where we stand. Because it has a direct impact on the dollar yen. And you can see here it looks like we're trying to put a little bit of a hammer. We talked about this yesterday, that in all likelihood, the move had been so big that it would probably continue and move all the way into Tuesday, because as people look at their statements over the weekend and see how they've got pummeled in bonds, you probably see more people want to go in and pile out of bonds. So we're looking at a key level just below the market as far as the 61% of movement. We have this 54.24 over here, and we'll see if we can get a better look at this. You can see right here, this 54.24 is pretty key. Now we can overshoot a little bit more. After a big move like that, you could actually see this market even dip just to this area here, which would coincide with that 53.30, but it's been such a big move so far. And that comes in at that 53.30. And to me, it just seems like that's where they ultimately want to go to. Because if we come into the weekend, I don't think the market's just going to go on and stop. They're trying to put in a little bit of a bottom in here. But it's been one big heck of a move. And that has obviously directly impacted what's going on with the dollar yen. Now you can see here, where the dollar CAD is still pushing the new highs. We talked about that. Maybe it could even push up as high as 35.59. We talked about that. You're still pretty weak. But you can see that the dollar yen is kind of running out of gas a little bit up here. Now, we did see about ASO's comments, which the market is attributing some of the pushback to that. But I think you can see here that it probably has a little bit more to do with what's going on here in the bond market. And we've come into this area, and it's really pushed to the extreme. And this is my thoughts, not so much with the bond market, but with some of these moves, is that they've really pushed the envelope. Like we mentioned, I saw here, I don't follow the Mexican peso, but I saw that the Mexican peso is now to its lowest level since last February. So these moves, I can see these moves extend, as I was mentioned to a couple of guys, into the New York session. But I wouldn't be surprised, not for them to reverse, but for them to come off of some of these, for the dollar to come off some of the gains against different pairs, at least somewhat. I think that the moves are going to continue going forward, but I think that we've come just so far. Because I think people are going to be thinking, well, what the heck am I going to go and be carrying risk over the weekend? I don't. After the moves you've had here, like give you an example here in the dollar CAD, if someone were to exit, that's a very short-term trader, I don't think that they have to worry that it could happen. But I'm saying that the market is going to gap and still run even further in the Sunday session. I think any moves up in here, we talked about the dollar CAD once again. Up in here, if you look to this 35.59 area, we'll come back in here. And then it's right in here. And right at the top, you see right here, this is in February. And we talked about the dollar CAD being its the lowest level since February. So let's back this up a little bit. I think it helps to get a little bit of perspective of what we might see. So let's back this up to February. Right there. And this 35, wow, 35.88. And you see here's 35.22, 35.50. We're right here into this area, right in here, where we've got a lot of good volume here. Here's a stretch peak, but I just, like I said, I'm not sure how much more we're going to be able to push that. But we saw that we've got some pretty good volume all the way up to that 35.59, and then that stretch being 35.88. Remember we talked about, oh, this was at least over a month ago, maybe a month and a half ago, that one of the targets would be the 136. Things mentioned we hit this 36.16. So when we take a look here in the dollar yen, we blew past, I wouldn't say we blew past, but we got above the top of the zone here that we had. Remember the 650, we had talked about the 524, and once you got a 2-hour close, which you see that's not a 2-hour close, we finally got the 2-hour close above the 524, and that would open up the door for 650. So we got the 650, and we've exceeded that. And we've come up here to the 682, but we've really run out of gas at this point, pulling back. I mean, not like I said, we haven't seen some big reversal, but I think this is, although people are attributing that to part of it, to Osso's comments. And Scott says, I agree the dollar needs some retrace. Yeah, I mean, here's the thing, Scott. I mean, anybody would look at this and say, oh, big deal. The dollar needs a retrace. Like, that's news. Yeah, I'm not saying, and I know that, you know, you're thinking, yeah, hey, we're too far done. I know what you're thinking. I'm just saying, if someone else were looking at it and go, oh, well, thanks a lot for the big news. The dollar needs a retrace. No, my point is, and I was talking about this yesterday and even the day before, is for the last 4 weeks, I mean, usually you see that, but for the last 4 weeks, whatever the direction is, whether the dollar's breaking higher or the dollar's breaking lower. Come Friday, that move just continues to be accentuated. Usually you'll start to see it on Thursday, and then it just gets accentuated. Case in point would be the euro right now. And, you know, we remember the euro last Friday, remember? And it was all just going in one direction, remember? To the upside. So my thought is that we've come to such an extreme, and I'm not saying we can't push it even higher, which I think that that's a possibility. I think that that's a possibility, but I would not be surprised to see, and I think you're already starting to see it here with the dollar yen. And it's not like as if it's coming off hard, but it is coming off a decent amount. You see what I'm saying? Once you got up here, what, almost at 7, you pull back here about 75 pips. You rally back up to almost 7, and we hung around here. And then we pull back about 60 pips. Then you got back here almost to 7 again, about 85, and we pulled back 80 pips. So I'm saying you're seeing pushback. So that's my concern is, as I mentioned, to look at this in an overall perspective, because we're looking at the major specifically. I posted a chart yesterday, and I don't know if I mentioned it. I think I mentioned it here, but I was talking to the guys also in the chat room. This 843, to me, I think is key, where they would dip and they come pop back up. And I thought we might already see that it would already start dipping. It hasn't. But to me, I still think the year is going lower, but we've come so far. And I'm thinking some people might just say, you know what? And I can see with the euro, because they look like that's going to continue to weaken. But to me, it almost seems that people say, you know what? Hey, look, my thought is after such a big move, the people just say, you know what? I think there'll be a lot of people that hang on to the shorts and look for lower, but I think there's a decent amount of people that if we get a dip into this 843.26 just below that, the people are going to just say, you know what, I'm out. There's no reason for me to hold over the weekend. Heck, it might even go the other direction. And I think you'll see people taking off and actually, seeing the market come back. We'll see what happens, but we're pushing in that direction. You're seeing these extremes right here, even with the dollar CAD. I said again, my point is, if you're a day trader and you exit out around, let's say, 36.60, okay? Hang on. So if we're going to get up here, my thought is we've pushed it so far, I don't think anyone's just, if you have like a very short-term trader, I don't think they're going to be saying if they get out at 35.61, oh my goodness, what if they gap it to 37.35 on Sunday? I don't think that. That's what I'm saying is I think they're going to push in this direction. But I think you might see a little bit of a pushback as we push into these highs. And don't forget that one high was 35.88. And maybe that'll correspond if the euro were to take, but the euro seems to be holding up a little bit better right now. But if the euro takes this dip past this 43 into this area, you might see the same thing too. You're already starting to see that here with the dollar yen. But a lot of this has to do with the bond market, which is attempted to try and put in a bottom, but it's had a tough time. If you look at this, you've seen almost here almost be like a little mini hammer. The market went lower. Then you have an inverted hammer, and it's like, okay, we've got it. So I think people were trying to step in here. Okay, so here, then you look like, okay, well, maybe we're starting to bottom. So we take out the lows again, okay? That makes sense. Then we get an inverted hammer. Man, I tell you what, that looks like potentially that could have been a nice setup. You see what I'm saying? From here, the market has really got whacked. It's trying to bottom. Then we take another dip. We take out the lows. We get an inverted hammer, and I'll be doggone if we don't push again lower. You see what I'm saying? Now it's trying again, but I think the market is just, people really doubting this one now. And I just don't think that we'll get a low until Tuesday. But you already seen the dollar offer a little bit of pushback, and I think it's just because the move is so extreme. We'll go and take a look at the gold market right now, which we didn't take a look yesterday, I don't believe. And on that audio cast I did yesterday, it's only available in the chat room. We were talking about I was talking about the gold yesterday, and I was telling people that I thought we would get down to this 1250, which you did. You see, we took this dip here, but this is where I was posting the podcast, not podcast, but the audio cast via SoundCloud, and I said, I think we're still going to push lower. We're going to come down this 1250. I don't know if we do it today, which we've already done it already last night in Asia, and actually here in the U.S. session, later in the U.S. session. But my thought was, and I told them, I was saying that in the audio cast, the general consensus was, and it was mine too, hey, if Trump gets elected, of course, like Art Hogan did a good thing. He was saying, he put it out, the good Trump versus bad Trump. And that's what the market's focusing on, the good Trump. But he put in there, but now the market's concerned about the bad Trump. Will the bad Trump pop up? And I'm talking about the protections policies, not the personality, not all the other stuff. But my thoughts were, like I said, hey, it was going to go to 1400. That was the initial consensus. And when it was up here that evening, I was telling some people live, I was saying, I'm surprised it's not even higher. I thought it could have even, the way the market was reacting, I thought it probably made more sense for it to be like at that point, 1350, 1360. And so we've seen the market go and pull back and continue to pull back here. And we came in yesterday. This is where we were yesterday. And my thought was, any of the bulls that were thinking, hey, we're going to go and see 1400, maybe they didn't think all the way to 1400. They're thinking, what happened? This is crazy. This didn't make any sense. I thought we'd be a whole heck of a lot higher. We're seeing the good Trump, but come on, we should still be higher. We shouldn't be at 1270, upper 1260s. So my thoughts were, hey, look, those people are going to say, you know what? It looks like the Fed's going to raise anyway. What the hell am I doing long? I'll still like gold, but I'll just get long after they do the Fed high or into the Fed rate high. And so that's what I thought. I was telling the folks, I think the way you want to do it is, and actually I got long gold yesterday as it dipped down here in a scalp when I was talking on the chat with Deli. And it was a very, very quick scalp. But I was telling people, I think the better way to play it is, trade your volume should be very, very light and take it from the short side, because if it starts to work higher, you'll be in very, very light positions. But I still think we're going to 1250. That's what I'm saying is, even though we're this low, I was saying, hey, look at it from the short side. I got long on a scalp, and there was another scalp, another gentleman asked him, and I said, you know what, I'd only be scalping. And he got long again, I think it was right in here, later on in the day. And I said, I'd only be scalping. And I think he got out with about $2.50 and change or something like that. And then it kind of moved on. He thought, well, maybe that's not it. Maybe it was going to continue to go higher. And it dipped a little. It went a little bit higher, about an extra $1.50, $2. And then you can see that the wheels fell off the caboose, and we just continued lower. So we did make it eventually to these 50s. I think the only thing is that we're really overdone, because if you look at it here, we've got a lot of good volume. I'm looking on a 15-minute chart, but you can see all this good volume in here. You see? Even this dip to fit. This is all good volume. We'll back it up a little bit. You see, we're really overdone. This is all good volume in here. So, you see, all that is very good. You see, and we got down here to about, 51.40 here, 50, barely, just a little 50. So we got past here, but this actually went just below that. This is all good volume in here. And when you look at it, how far the market's fallen, you see here? Oh, that's very good volume. You can see it's all in here. I think I'm not saying to buy it at all, anyway, whatsoever. but I wouldn't be short at this point. Now you're seeing the market trying to pop up a little bit. See here. As we dipped into this area and you have that good volume, when you look at it in perspective, we've just fallen so far. But we did make it down and we made it into the 50 and change, essentially, or 51. Oh, I think Blake's on.
I am.
Oh, okay. Well, hey, how you doing?
Good.
Wow, man, the move continues.